the one true thing is that they are going to get it from the tax gap. But what they don't tell you, and they make it look like, well, the tax gap are these wealthy people, and that's where we're going to get it. No, they're going to stop. They're going to shrink the tax gap on your shoulders. That's just the truth. That's the way it's going to work. The way they can do this is to tighten the screws on all of us and make sure not a dime gets by without them getting their end. And this is what the problem is. And so I wanted to talk about this gap, or the Cash App reporting, because again, a lot of this is misreporting for whatever reason. I'm not sure why that is, but let's see where we are here. So let me go into the story. Okay. So first, I'm going to talk about the IRS. And it was a couple weeks ago we talked about these information reports, all the 1099s that are out there now. And this really started in 2011. So let's read. This is from the IRS.gov website. The IRS uses third-party information reporting on forms in the 1099 series to increase voluntary compliance and improve collections. Is it voluntary if they force you to do it? I don't know. Beginning in 2011, legislation requires reporting of income on in two areas: payment cards, credit, debit, certain electronic transactions, and securities basis reporting. Now, the basis reporting is actually sometimes can be a good thing for people, and we're going to talk about that because this is where it comes in. The links below take you to forms, instructions. And I don't think I'm going to have time today to bring up the 1099K instructions and read who has to get these. When does a company have to send these reports, these information reports? Now the 1099K. And so really that's the issue, right? So this was yesterday. I brought this up that Candace Owens had tweeted this out. The Biden administration is attempting to empower the IRS to monitor every single withdrawal, deposit, and transaction you make from your personal banking accounts, PayPal, Venmo, etc. And they labeled this mostly false. If it were me labeling this, I'd have to say that's mostly true. It's not all true because it's not everyone. It's not every single one. And so it's not totally true, but it's mostly true. And I'll tell you why that is in just a moment. So here's another one. Yes, from Verify. Yes, users of Cash Apps will get a 1099 form in annual payments if annual payments are over $600. But that doesn't mean you'll pay extra taxes. So that's why they say this is false. Yeah, well, you won't pay taxes on all of that money. But here's this is where the problem comes in. Being a gentleman who, I use that term loosely, obviously, who helps people with IRS problems, I have seen this, right? So for instance, someone gets a 1099 from their brokerage of 1099K, and they don't know what it is and they don't report it, or they don't get it. They don't get it at their house for some reason, and this happens a lot, and so they don't report on it. And so what happens is 3 months, 6 months, a year, maybe longer later. Actually, they've been pretty good because they have the computer program now that matches. So when someone sends you a 1099 to you for your tax purposes, they also send it to the IRS, right? So when I pull transcripts, we get copies of all that. We know what the IRS has for you, and that's when we go to prepare your tax returns. So many of my clients haven't filed in a couple of years. And so we go back and we get this information and we make sure that we capture all the reported income. And so a lot of times, again, people don't get this. But what will happen is they'll get a notice from the IRS called a deficiency notice. And the IRS will say, well, listen, this is what you said on your tax return. And then this is what we found based on this 1099 that someone sent us that you did not report. And based on this 1099 that someone sent us and you did not report, your new tax, this is what you said your tax is, this is what your new tax is. And then you have an opportunity to object. Now, hopefully you get that letter and that you object. Many people don't even open the mail from the IRS. They're afraid of it and they don't open it, or they don't know, what that all means, because it is kind of legalese. And so they don't respond or for whatever reason. And then the IRS assesses a tax against you based on that information form that they received. And that's going to be the same thing here, right? That they're going to get these. So, many people use Venmo or these other outfits, PayPal, Zelle, these others, Cash App, in order to amongst themselves. So I go to dinner. I pay for dinner. Everybody sends me the Venmo and pays me back. Dinner ain't cheap, right? So you have 4 or 5 people, right? I do that a couple times a year. Am I going to get more than $600? Well, yeah, I'm probably going to get more than $600. And maybe I do sell some things that maybe are taxable, and that's in there too. And then the IRS and then these outfits, the third-party reporting, is that's what they're called, third-party reporting. They send me a 1099-K. And now it's on my shoulders to tell them that it's not taxable. So when they say in this report, let me go back here. When they say here but that doesn't mean you owe extra taxes, that's true. But the onus is on you to prove that you don't owe any extra taxes, right? They have the information that shows that you did receive this money. What now you are going to have to say that wasn't taxable.